Okay, good day trader. My name is Wasku Smart FX. Welcome to our YouTube channel. So today also we're dealing with the weekend trade recap. So which means it's just a time whereby we show the trade we took and why we took the trade, what are the strategy that build up the trades. So that is just what we want to do right now. Looking at least one of the trade we took during the week, just looking at one of them, or sometimes you can look at two, but today I will actually be looking at one. I'll just talk about the strategy and talks about why we think the trade is a high probability trade and why we think the trade can work. So in forex trading, it's a game of probability. So which means that we are given the right, or we are given the ability to calculate the probability of each trade we want to take. And we have to understand that if the probability fall high in our side, that means that we should enter the trade. Even though the probability fall high in our side, having an edge does not mean that you actually win the trade. So you have to understand is that having an edge does not mean you win the trade. So you just have to probability plus risk management. So in case market goes back against you, then you have to be able to secure what you have taken. Most of the time I usually tell people in my channel that, secure your profit, and people were like, why can't we just wait for the take profit? Yes, wait for it. And sometimes no, don't wait for it, because I know that if you secure your profit, at least you are having something in that trade. There are scenarios that market will not get to the take profit, like we just sell or we just buy, and a little bit it just remain like 10 pips, then you just see market reverse back and hit stop loss. So in this kind of scenarios, this is actually good, because you have to understand that forex is a game of probability. Nobody know exactly. Nobody can say I'm 100% sure the market is going to be a buyer, market is going to be a seller. You are only going to say that based on your belief, based on what you know, based on what you see, based on what you understand. So it can be a scenario whereby what you say buy and another mentor or another high forex trader may say sell. And the funniest thing about forex market is that both of them can be a winner. You can buy and you can sell at the same time. You can buy first and sell second. So both of them can be a winner, but that is why you have to understand that forex market is not a game of 100% assurance. So when you calculate your probability and you feel like this is where market is supposed to go next, that is why I actually tell people that market draw to two things: the fair value gap, or something they call it the fair value area, or liquidity. So you have to know if market is seeking liquidity or market is trying to close a fair value gap. So those are the two things you have to be so assured of in this forex market. So that's just like introductions and just trying to clear out some things. When I say secure, what I mean is just take out some profit and let the rest to run. If the rest come back and hit stop loss, fine, but at least you take out something out of the market. It's not about not taking out anything at all. So you have to understand that risk management is good. Probability is very certain and good. So let's look at the charts and let's look at what we have today. So looking at that's the trade we took was on Tuesday, November 12, 2024. So this is gold here. You can see it. I have a gold sell limit, entry 2609.50. So I was looking at this trade. Let me pray on. I was looking at this trade, and a lot of people that have been following me for a quite while, they know that I actually have two main strategy. Number one is the intraday strategy, and number two is the institutional market structure strategy. So which means those are the two things I actually use most time. But this particular trade here was intraday. Whenever I use 3 minutes, 5 minutes on gold, just know that I'm actually looking at intraday. And when I'm trading an intraday strategy, market must always be inside a Q zone. It's either it is New York Q zone or London. London Q zone is not certain. London key zone is of low probability. It works, yes, sometimes it works, and sometimes no, it doesn't work. So, but I know that I put my risk management and let everything to play out itself. But when it comes to New York's Q zone, yes, sometimes you have a lose on New York too. Yes, you have a lose, but most take profit is more than lose in New York Q zones. So if you look at this trade here, you can see that it is New York Q zone. So I was looking at the New York Q zone. I have talked about this strategy on my YouTube channel. You can just go on the fair value gap mechanics. Yeah, the fair value gap, the principle of fair value gap. Go check. You will see when I explain this strategy there. It's just an intraday strategy. Just New York Q zone, 3 minutes, 5 minutes. Just stay there and find this kind of thing in New York Q zone and see. That's just it. Okay, let's look at the charts. So this is the day here. This is the day here. Tuesday, November 12. So market was bullish in London. London Q zone closed. London was bearish. You can see London was bearish. But when London closed, the section between London Q zone closed and New York Q zone open, it was bullish. And when market was bullish too, market was going into a fair value gap in 1 hour chart. There's a fair value gap in 1 hour chart I was looking at for sale. But market was going there patiently. So when market get inside of it, it was not in New York Q zone then. But when New York Q zone opens, market traded back. Then I was only looking for two things: liquidity and market structure shift. Liquidity and market structure shift. Liquidity, market structure shift plus displacement. Those are the three things you are looking for in 3-minute chart or 5-minute chart in New York Q zone. Liquidity, market structure shift, and displacement. Those three things, just look for it and it is perfect. So I was looking for the liquidity. I was thinking, okay, market want to be I know that market is supposed to sell because of the 1 hour fair value gap. But when market was going, I was not seeing liquidity. So I saw this liquidity here. Market took out the liquidity above this high, and you can see the wick out. Then you can see how market continue to sell. You can see this whole sell that breaks this major low. So when the market comes down here and breaks this low, I was saying, okay, fine. I have a market structure shift. Where? Here. At this low here, not this place. It was, I know you can see this bullish, and you can see at this low here, market structure shift. Now, where is my fair value gap? There's a fair value gap here, but I was not looking at this because it is close to the discounts. It's close, is in the discount zone. You can see discounts. So where can I do next? Then I see something we called overlapping divens. There's something we call the overlapping divens. It means that a mitigation block inside a fair value gap. That is the combination of, that's what we call the overlapping divens, which means that that is a possible place market can react from. So I saw this. You can see a very perfect move from there, how market closed the body. You can see market respected it very clearly. The body of the candle was at that particular zone. Then you can see this whole bearish movement. So that's all the understanding I have about the trade. And I put my stop loss above this here, and I was looking at the 15-minute fair value gap. In my last video I said something about intraday to an intraday. One of the easy trade, or let me say one of the most confident trade you can ever trade, is trading an intraday to an intraday, which means that you are trading inside a range. There can be a range. You can see this one now. This low to this high is a range. Now you see a trade inside this range, then you want to take profit inside the range again. You are not targeting external. This is an external. This is an external. This is an external. You are not targeting an external. You are only targeting internal to an internal. So those are just like, it give more. I can possibly say, okay, market wants to be a seller, then I should put my stop take profit here. And though market may come back and eat it, but see the time. See, you can see how market goes up again and eats me out. See, market goes up, though it does not eat it out, but see now it eat it out. So you have to trade most confidently. Just trade intraday to intraday. So that just will give you most confidence. So let's look at it in our. So this is here. and market it, take profit here. So thank you very much. Don't forget to like, share and subscribe. Share with your friends. Thank you very much.